Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Thursday, May the 7th. The year's 2020. Let's talk trading. Tro Hl5, that indicator. Um, I found a small bug in it, and it probably didn't affect 99% of the people out there. But if you like to use the show only crisscross, if you happen to use my shift of one or greater, it was missing some of the lines, but I caught that bug last night and I've already put out a fix for it. So you need to go download that fix. And I'm going to show you a few more tricks with it because this is probably the Swiss Army knife of horizontal line plotters. And it also plots angles. That was for Mighty One. But just remember, fellow traders, that these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And always, 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 when you place your trade, always make sure you have your risk management in place. And that means you have the correct position size and your stop loss is placed at a position where you won't lose more than you're willing to lose on any particular trade. And not only do you have to have your money and risk management in place, you also have to have your brain management in place. I should probably turn that gray since brains, you know, it's gray matter, right? So let me just do that. I just noticed that. Brain management. So no FOMO, no ROMO. And remember, the pain doesn't come from the market. Pain comes from your reaction to the market. You do it to yourself. Weekly, as you can see here, there's some gaps that haven't filled and probably very unlikely that they will fill this week. Some weeks are like that, and you can see here we've just got red, 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 red on the pound dollar. And if we flip over to the euro dollar, once again, red, red, red. On the daily, you see here, we entered the opening range for the week and then fell right through it. So another horizontal line trade. You would have taken that short on a green daily candle the day before on a red, but in both cases, those paid off huge. Inside bar from a couple days ago, almost got to it today, but here yesterday, once again, huge payoff. And there's a bunch of inside bars for the month. Range, you can see here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 pairs over 100. We broke through the previous day's low and boom, we're only 4 pips off the daily low at the moment. Pivot point got taken out. Nice trade there. And then short signals. And green rats, get ready. About the rat zone, somebody was asking, what if the range isn't large enough? You just have to remember, the rat just turned left. The rat didn't think about things. The rat didn't try and figure anything out. The rat didn't even remember anything other than turn left. So here, green rats do nothing but buy. Here, red rats do nothing but sell. Only thing is, for the rat zone to be in effect, the range has to be large enough, has to be greater than 40, because that's just the scenario. Otherwise, you don't know which way to go because the ranges would be overlapping. So you just have to be patient. But if the price gets into the rat zone multiple times, the rat just starts eating that cheese. So right now, we can see the pound is starting to move up, and the smart rat zone right here, the 20% line, we're 6 pips below it. So we almost hit the psychological 75. once again, we took out the pivot. And you can see here we took out the daily pivot. We have a missed daily pivot here. And of course, we've got that missed weekly pivot there. In and out of the wick zone. The wick zone was only 6 pips this time. On the wall mall, you see here, there was a short here. There was a short there. A short, a long. So there was opportunities once again. Oh, I need to turn that back to show high minus low, the range. So we got a range of 17 pips so far this hour, and the hour is only 10 minutes old. So once again, just the power of taking basically trading physics, range over time. And you can see here that within a certain time span, price is going to break out of this 10 pip range. On the price action, oh, somebody said they combined the rat zone with the, or they added the 3-level ZZ. Yes, you can do that. Just remember one thing, this is a breakout indicator. So the 3 ball most likely was here last hour, and then you see what happened. It says breakout. So if you would have taken a reversal, you may have gotten a pip or two, but then if you weren't quick enough, you see it would have pushed against you. So what you really want to see, you want to see that 3 ball put in, and then you probably want to wait for the next hour, see 3 long next bar. So just let what happens happens, and if price moves out of the rat zone, so be it, without you, but just wait. Basically, just wait. And here's the map using the Tro Hl5 indicator. Somebody asked me about this, the settings. So here, we're basically just using the, let's see, what are we using? We've got the high and the low. We're showing the midpoint. We're showing the top and the bottom. And down here, you see the my period is 4 hours. We're using 1 bar and a shift of 1. Now, that's fine and everything was working. But what happened was, if you did what I was doing on this one, and this is when I discovered it, if you have only show near set to true, if you use the shift, it was missing. It wasn't plotting some of the lines that hadn't been crisscrossed. So I found that, and I fixed it last night. It was one of those simple, oh, I forgot calculations. But normally you don't use a shift of 1 or a shift of anything. So when I was creating this template yesterday, it was I was looking at it, it's like, that's not right, that's not right. So I had to get into the code. So why do I have this? Because one of the things, or why did I do this? Because one of the things I did was I ran frequency distributions on high minus previous high and previous low minus the low to calculate the breakouts. So here in this particular chart, we have multiple instances of TRO ranges. So in the first case, we're showing the high minus the previous high for the 1 hour, and we're using 24 bars, and we're not using a shift because we want to know what's going on at the time. And absolute value is false. The reason I have it set to false is because right here in the current bar, you can see that high minus previous highs minus 57. So what this is telling me is it didn't even try to break out. It hasn't tried to break out at a high. And so the next instance here, we have previous low minus the low. Once again, absolute value false, 1 hour and 24 bars. And that's here. So right here, previous low minus low, 10 pips. So what I was realizing is sometimes this line could be here. And I was thinking about the wall mall method and thinking it might make more sense if we're going to take these breakouts. If we're going to break out, let's take the breakout either of the zero line that, anywhere from 0, 0 up to, 10, 20, 30, dot, 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 80, 90. We can take that instead of waiting here. Or in this case, you take the short at 90, then you see it hit the previous low. Then what you do is you get ready to react at this level, because if it doesn't break, it's going to reverse. And there's a good chance that it could reverse. So you basically have your hand on the exit button, but as you can see here, it pushed through. And then when it came back up through the 80, you could have taken an easy 10 pip trade right there. Easy 10 pips. You just have to do it. So, and then finally, the last instance of the TRO ranges is just show high low, use absolute value, true. You could have it false because high minus low is always going to be 0 or greater than 0. So in this case, you can just say, yeah, use absolute value true. And once again, 1 hour and 24 bars. So you just basically test the last 24 hours, and you can see the range, previous low minus low, and high minus previous high. And so here's 0, it touched it, so that wouldn't have been in here. You only got 2 pips, 4 pips. But since this the pound has been going down, you'd probably be looking for the low breakout. So previous low minus low, 10, 39, 17, 13, 17. There were some nice trades to be taken. So you can use this with or without the wall mall lines. It's just something, taking the breakout of the previous candle can be very valuable. So once again, back to the map, multiple instances here, and if you use multiple instances, just increase this number by 1. So the next one will be 2, next one will be 3, or you can type in any unique number you want. It doesn't have to go in order. And down here, the thing that we changed here was we wanted my period to be 1 day. And then on this one, 2, my period is a week. And on the final one, my period is a month. Now, many times people don't use monthly charts, but there's something I should show you on the monthly chart. In fact, let me pause the video just for a second. Okay, I switched over to a blank chart here, and looking at dollar Canadian because I was scanning around. You see here this wick zone? Now this is a monthly chart. So this is this particular bar right here was back in 2016. And you see what happened there? You see what happened here? So you might want to scan for these type of patterns because you can see here lower high, lower high. So you might think dollar Canadian is going to take. And right here, you can see price came down below these wick zones. And once again, this is monthly. And something to think about. So, fellow traders, get the latest fixed version of Tro Hl5. And remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. Don't forget to subscribe and hit like and share.